Today in crypto. Bitcoin just set a new all-time high just minutes ago as it has pushed past $37,000 for the first time ever. The cryptocurrency is now up 5% in the past 24 hours and is now up nearly 30% in the past 7 days alone. The cryptocurrency's market capitalization is now nearly $700 billion, bringing it even closer to the market capitalization of gold. Bitcoin has quickly dipped back under $37,000 as the cryptocurrency has encountered some selling pressure at those key levels. The funding rates of leading Bitcoin futures markets are currently well into the positive at 0.1% per 8 hours on Binance and lower but still relatively high on other platforms. Many view this extremely high funding rate as a sign that there are many retail investors that are buying the cryptocurrency via futures, which could lead to a steeper correction if the upward buying action slows. The funding rate is the recurring rate that long positions pay short positions on futures platforms to normalize the price of the future to the price of the underlying spot market. Behind the ongoing Bitcoin price rally is a surge in both retail and institutional interest. Just recently, Skybridge Capital revealed that it owns $300 million worth of BTC. Retail investors are also flooding into the cryptocurrency market as well. The website accepting comments on the proposed FinCEN rule shows crypto users have until January 7, not January 4 as the regulator claimed. The United States Treasury Department may have accidentally widened the window of opportunity for anyone wishing to submit comments regarding the Financial Crimes Enforcement Network's new crypto rules. Last month, the Financial Crimes Enforcement Network, or FinCEN, proposed rules that would require registered crypto exchanges to verify the identity of people using an unhosted or otherwise covered wallet for a transaction of more than $3,000. At the time, the regulator stated that stakeholders would have 15 days to respond with comments, later clarifying that the submission period would end on January 4. However, according to regulations.gov, the website responsible for accepting comments on the proposed FinCEN rule, crypto users have until tomorrow, January 7 at 11:59 p.m. ET to respond. This effectively means FinCEN may have submitted their proposal on December 23 and not December 20 as previously reported. This is a show, said Dayton Young, product director at Fight for the Future, a digital rights group based in Massachusetts. FinCEN has pushed back the comment deadline for its latest cryptocurrency surveillance proposal. Because government officials can't count to 15, the group has encouraged people to speak out against the proposed rule, claiming FinCEN attempted to ram through this dangerous new surveillance authority. When FinCEN announced the new rule, many argued that the period of time for submitting comments was insufficient. Young suggested that the regulator extend the time for comments to 60 days. Coinbase's chief legal officer, Paul Grewell, has also argued in favor of a 60-day comment period given the holidays and the ongoing pandemic. At the time of publication, regulations.gov is still accepting comments beyond the Monday deadline, but it is unclear whether any received between January 5 and 7 will be considered valid. Cointelegraph reached out to FinCEN, but did not receive a response at the time of publication. The combined value of all cryptocurrencies just hit $1 trillion as Bitcoin and Ether continue to surge. The total cryptocurrency market capitalization, a major bellwether for the overall health of the digital asset class, broke $1 trillion for the first time ever at 1900 hours ET on Tuesday, January 6. Bitcoin briefly topped $37,000 around the same time, marking a new record high. Measured by market cap, the crypto asset class has virtually doubled over the past month as Bitcoin, BTC, broke out to new all-time highs and Ether, ETH, cleared $1,100 for the first time in 3 years. Combined, both assets account for roughly 2/3 of the overall market. BTC and Ether's gravitational pull on the market has seen dozens, if not hundreds, of cryptocurrencies report double-digit percentage returns this past week. The trillion-dollar capitalization was reached mere days after the market exceeded the highs from the 2017-18 bull market during the last cycle top in early 2018. The combined market cap hit roughly $830 billion, according to CoinMarketCap. At the time, altcoins peaked near $547 billion after Bitcoin retreated from its December 2017 high. The altcoin market is currently worth less than half of that total, underscoring Bitcoin's sheer dominance so far in the current cycle. Typically, Bitcoin's bull cycles pave the way for a subsequent altcoin rally, which is often larger than the initial BTC markup, dubbed outseason by the crypto community. The parabolic rise in altcoins can happen quickly, leaving investors with little time to prepare. Many crypto observers are forecasting a bullish 2021 for Bitcoin and altcoins. They cite growing institutional demand for BTC, the ubiquity of crypto on-ramps, and the natural ebb and flow of four-year market cycles for their optimism. Bitcoin's BTC parabolic rally intensified on Wednesday as the price broke above $36,000 for the first time, sending a strong signal that the bull market still has further room to grow. The flagship cryptocurrency peaked at $36,574.47 on Bitstamp, easily surpassing its previous all-time high. The price has gained 8% on the day and more than 25% over the past week. Continue reading on Cointelegraph. The United States Treasury Department may have accidentally widened the window of opportunity for anyone wishing to submit comments regarding the Financial Crimes Enforcement Network's new crypto rules. Last month, the Financial Crimes Enforcement Network, or FinCEN, proposed rules that would require registered crypto exchanges to verify the identity of people using an unhosted or otherwise covered wallet for a transaction of more than $3,000. At the time, the regulator stated that stakeholders would have 15 days to respond with comments, later clarifying that the submission period would end on January 4. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.